When billionaires give money away, it's not always charity. Sometimes it's a way to avoid taxes. And the mega-rich have mastered a wealth tactic most people never think about: private foundations. To the public, these foundations look like pure generosity. Behind the scenes, they're a powerful way to protect, grow, and control wealth. As Forbes puts it, quote, "Setting up a private foundation is one of the smartest moves a wealthy person can make," end quote. And if you think that sounds cynical, get this. There are now more than 900,000 private foundations in the US alone. Some estimate that number will hit 1 million in just a few years. So here's how they work, why the rich love them, and why it might make sense for you too. First, let's start with what is a foundation. Well, it's kind of like a mini charity organization. You set it up, put money into it, and then it invests that money and eventually gives it away. But unlike typical charities, private foundations are set up and run to benefit the people who created them. So why would someone want to do that? Well, we found for reasons the rich use foundations to make themselves richer. Reason number 1, tax deduction today. Let's say you own a business that's worth $100 million, but you don't want to sell it. How can you access some of that value without paying capital gains tax on the sale, or having to worry about the headaches of running the business day to day? Easy. Start a private foundation and donate the business to it. That's right. Unlike regular charities, which only get tax deductions for specific types of donations, private foundations can accept basically anything. Not only that, but you get to take a tax deduction right now for the full value of your donation, even if you plan to donate it over time. So instead of getting a tax deduction after you pay capital gains tax on the sale of an asset, private foundations let you get a deduction before. And according to the tax foundation, that saves high net worth individuals millions of dollars each year. Reason number 2, keep control. If you're super rich, there's a good chance you've worked your entire life to build your wealth. Do you really want to give that wealth away and have no say in how it is managed or where it goes? Of course not. With a private foundation, you get to name the board of directors, which means you get to choose who manages the foundation and how the money is invested. For example, Bill Gates has given away tens of billions of dollars through his foundation. But he still owns around 489 million shares of Microsoft stock, worth nearly $30 billion, because he set up the foundation to keep control of those assets. In fact, Forbes says, quote, "The Walton family, whose patriarch Sam founded Walmart, has kept much of their fortune inside their family as private foundation because they wanted to maintain control over their investment portfolio and voting power," end quote. Reason number 3, grow it tax-free now. When you start a normal investment account, any profit you make is taxed at your income tax rate, which can be anywhere from 12 to 37%. But with private foundations, all profits are tax-free. That's right. The foundation pays no taxes on dividends, interest, or capital gains. All they have to pay taxes on is the salaries they pay out to staff. And even that is usually a tax-deductible expense. Just ask the family of MIT co-founder Charles Stark Draper. His heirs reportedly took advantage of this loophole so effectively that they turned a $20 million inheritance into a $3.6 billion fortune by investing in everything from stocks to bonds to real estate. And as you can see in this chart, they're not the only ones. Since 2010, the assets held in private foundations have skyrocketed from around $500 billion to well over $1.5 trillion today. But arguably the best reason the ultra-wealthy love private foundations? Reason number 4, legacy and influence. Private foundations let you give money away while keeping control of those assets. And that's given some of the world's richest people extraordinary amounts of power. Take, for example, the Open Society Foundation started by billionaire George Soros. Since 1979, the foundation has spent over $32 billion promoting democracy around the globe. Or consider the Ford Foundation started by the heirs of the Ford Motor Company founder. Over the past 75 years, they've spent over $1 billion fighting for racial justice in America. And then, of course, there's the biggest of them all, the Bill and Melinda Gates Foundation. With $59.9 billion in assets, it's the largest private foundation in the world. And with that size comes power. According to USA Today, the foundation has helped eradicate polio in all but 2 countries, developed better ways to store and distribute vaccines, and has helped lift 200 million people out of extreme poverty. At the same time, critics argue that the foundation uses its power to push an agenda that benefits the rich, not the poor. They point to a recent scandal where the Gates Foundation gave tens of millions of dollars to Coca-Cola and other food companies to promote healthier diets, while at the same time Gates himself was buying hundreds of thousands of acres of farmland around the country. See, despite all the good they're able to do, critics argue that private foundations mostly serve the interests of the rich. And while we were researching this video, we came across one last interesting report about private foundations. According to ProPublica, almost half of all private foundations commit what's called donor-advised fund abuse. What's that? Well, remember how we mentioned that you can contribute all sorts of assets to your foundation, including stock, real estate, even businesses? Well, sometimes those assets aren't exactly liquid. For example, let's say you own a piece of property that's worth $10 million, but it's also a headache to own and maintain. You could sell it and donate the cash to your foundation, but then you'd have to pay capital gains tax on the profit. Instead, you can simply transfer the property directly to your foundation and take a tax deduction based on its fair market value. But here's the catch: if the foundation can't easily turn that asset into cash, they won't be able to spend it for at least a year. So many wealthy donors have been taking advantage of a loophole that lets them transfer illiquid assets to their foundation without waiting a year to get their tax deduction. ProPublica estimates that wealthy Americans are abusing this loophole to the tune of $18 billion each year. Now, we're not saying that the ultra-rich are always using private foundations for selfish reasons. In fact, we're big fans of the work done by organizations like the Ford Foundation and the Gates Foundation. But at the end of the day, private foundations are a powerful tool for protecting, growing, and controlling wealth. And while anyone can start one, most people don't have enough money to take full advantage of them. Now, there are plenty of other tax strategies the ultra-rich use to grow their wealth, like using a dynasty trust or a family-limited partnership. We may cover those topics in future videos, so if you're interested in learning more about those strategies, definitely subscribe.